Good morning, everyone. Paul Duncan here. It is March 10th, Thursday. Let's go ahead and get started. I'm going to change the presentation structure just a little bit. We'll start off with taking a look at overall, where are we in terms of the overall indices. For those of you who are GammaEdge subscribers, you recognize these as what we call the wing charts. This shows the net cumulative gamma on each side of what we call the zero. And when we see the red wing greater than the green wing, we're in a net negative gamma condition. Expect greater volatility, expect that the dealer response to buying puts is to sell the underlying and move down fairly rapidly. And also expect that when those puts are closed, the dealer response will be to cover or close their positions and buy the underlying, causing a rip to the upside. Hence why we have this increased volatility. The SPX is shown here in the upper left, the SPY in the upper right, the Qs here in the lower left, and IWM in the lower right. You can see in all cases here, we've got net negative gamma across the board. You can see the gamma distribution for each of these, and the tools on the site allow you to zoom in and do a number of things here and analyze this. Overall, we're very bearish. We are somewhat improving, as you'll see, but overall, expect higher volatility, expect the markets to be under continued pressure. The market model via the cumulative tick, you can see back here several days ago, we lost the what we call the ribbons, and the failure to maintain that area typically has resulted in a downward market. And you can see over the last several days, last week and into this week, we did go down. We stabilized 2 days ago here at Circle 2, and then yesterday actually started to recover a bit, and we're now starting to converge back upward. That's important. We need this continuation here at Circle 3 to continue today in order to have any sense of a bullish market. We do have an eye out to actually short the bounces. So because of what you saw on the previous slide, and because we're in a fairly volatile news cycle, etc., we're not necessarily expecting to rally aggressively to the upside. From the ES perspective, the different gamma levels are indicated here in the block. I will note that overnight in the ES, we did see a drop here towards a key level at 4,200. This is for the March expiry, so just literally a week away. We will be shifting over to a newer contract here probably next week, but just be aware that there's still quite a bit of bearishness shown on the ES. When we take a look at the vol, the VVIX, and we take a look at the VIX, we can see that we continue to be elevated above the 20-day simple moving average here. And typically when we're above that in the VVIX, these are actually shorting opportunities for the VIX, but they're not confirming. You can see actually we have an overall trend up in the VIX, which is the lower graph here, and that overall trend up tells us that we're remaining elevated. It's going to be very, very hard to play the downside until we get the VVIX really starting to come down. The key about the VIX right now is that because we are in a trend up, we are looking for a drop below the 20-day simple moving average. You can see the Bollinger Bands here, which tell us that it's difficult to play the VIX one way or the other unless you're scalping. From the perspective of the SPX, the PM settled, which is shown here on the left-hand side, and the combo, which is the AM and PM shown here on the right. Overall, we have a huge support level sitting down here at 4,000. I think everyone's aware of that, but just be aware that is a definitive line in the sand. Something has emerged here within the last day. We've actually seen POI, the put open interest on the weekly or the PM settled SPX complex drop to 3,600. Generally, when we just look at POI in general, this is actually a neutral move. The puts are moving away. They're not being added close to spot price. at 42.77, and this could actually be an early bullish indicator, so we want to keep an eye on that. Circle 3, we're showing approximately 2.6% open high, low close expected move today, so watch for it's reduced compared to yesterday, but still watch for increased volatility. When we take a look at the 1 DTE, you can see that the indications here, we are only showing one tile here at circle 1, which shows you this is a single DTE expiry. So when you look at these PVI charts, when we post them, make sure you take a look here and see what is turned on. Up here at circle 2, net negative, not a very strong level at circle 3. We do have a fairly dominant amount of calls that are expiring tomorrow at both, as indicated here at circle 4 and circle 5 at 4,400. Key level down here at circle 6 of 4,200 remains the another testable level, and you saw in the ES we've been drifting down overnight, so it's very possible that we could move down. Below that, 4,100 is a key level, and as you saw earlier, the 4,000 is a line in the sand. All within range, though, just be aware of that. When we take a look at expiration, next week's expiry for both the AM and the PM really tell the full story. You can see we're just completely dominated by the expiry next week. A large number of puts are expiring. This could become fuel for an upside rally as these are monetized. We'll have to take a look and really watch and see what happens there. I also want to draw your attention out here to the end of the month. This is the JPM hedge, which expires on 3/31. They will put a new hedge on, of course, but this will become an upside attractor once we get beyond this. And so look for that 45.10 being a key attractor level, and we'll handle that as we start advancing above 4,400. The SPX, again, all the tiles are turned on, net negative, very large level. We have not come out of this large level in several weeks. It's very, very difficult for us to break this downside movement. The cumulative tick, as you saw, really is pointing us down. We just can't seem to get out into a bear condition, or a bullish condition, excuse me. Circle 3 are the JPM hedges that we just talked about. Circle 4 is that 4,400 level. You can see we really need to push above that to get any form of positive gamma here. We do have some in and outs that are showing up here, positive gamma, but these are really weak pockets right now. So basically back and forth, back and forth, back and forth. This is a safe hiding range for relatively flat exposure on gamma. 4,300 is another key level. If we can break above that, we are into this doldrums area, and then 44 becomes the target. If we can't break out of that, you can see that 4,250, 4,200, and then 4,100 in the SPX, not shown below, is a real possibility. So that's the overview. You can find us here at GammaEdge.us. That'll take you to a Discord sign-up page where you get 2 weeks free. Come on in, kick the tires. We got a great group, very active in a voice channel. A lot of charting tools have been developed and gives you some real good visibility into this. And of course, you can follow us on GammaEdges with an S on Twitter. If you're watching this from our YouTube channel, please like it. Put comments down there, what you like, dislike, etc., and go from there. So have a great Thursday, everyone. Thanks for your time.